Hello, welcome to Financial Markets Weekly, an audio podcast by Succinct Information. This is a professional summary, free of noise, focused on facts, and straight to the point. We help you save time while covering the key events and market performance. These are the highlights from last week.
Global financial markets last week were significantly influenced by the ongoing war in the Middle East. The initial terrorist attack by Hamas, followed by Israel's response, resulted in a rapid escalation of the conflict. Notably, Israeli troops entered Gaza territory after advising Palestinians to evacuate and move south. This development created a palpable shift towards safe haven assets by investors. Equity indexes traded slightly firmer in the US and were mixed in Europe but, in general, remained somewhat trendless. The S&P 500 added 0.5%, closing at 4328 points, and the Stoxx 600 gained almost 1% for the week. The energy sector was the clear outperformer as oil prices rallied. Crude oil prices resumed their upward trajectory, as is typical when tensions arise in the Middle East. Brent crude oil surged by 7.5% to $91, while WTI closed 6% higher at $87.70. In the energy markets, it's worth highlighting the massive move in European natural gas prices, specifically the Dutch TTF contract, which experienced an astounding 41% increase for the week, closing at €54 per megawatt-hour. Several catalysts drove this surge, including concerns about potential disruptions, expectations of cooler temperatures in the UK and Europe, a strike at Chevron's LNG plant in Australia, and damage to the Baltic-Connector gas pipeline between Finland and Estonia. All these factors raised concerns about the security of the continent's energy infrastructure. Bond prices saw a resurgence as demand for quality assets increased, reversing the recent sell-off trend. 10-year Treasury yields added 15 basis points to reach 4.63%, Boons increased by 16 basis to 2.73%, and Gilts by 19 basis to 4.39%. The dollar index appreciated primarily against the euro, sterling, and the Aussie dollar, while gold posted its best week in 7 months, gaining 5% to 1931. There were no monetary policy meetings by developed or emerging central banks last week. The key data release for the week was September's CPI inflation in the US. The headline reading rose by 0.4% month-on-month, primarily due to a surprise rise in rent prices, but it remained unchanged on an annual basis at 3.7%. The print was above expectations, resulting in a negative market reaction. The core CPI reading came in at 0.3%, unchanged from August, and 4.1% year-on-year, below the previous month. Coupled with the robust employment data from the previous week, the data reflects an economic reacceleration rather than a soft landing scenario. However, futures markets are not anticipating a rate increase at the November 1st policy meeting. In fact, they imply a 92% probability of no rate change and just an 8% chance of a 25 basis point hike. The minutes of the Fed's last meeting were released on Wednesday and offered a more dovish tone than anticipated, with potential risks of over-tightening if the Fed resumes hikes. A few Fed officials even made some dovish comments during the week. Returning to equity markets, several banks kicked off the Q3 earnings season with positive results, benefiting from higher interest rates. Among them, JP Morgan, Citigroup, and Wells Fargo all beat estimates, but their shares only gained 2 to 3% for the week. One notable gainer among US mega caps was the 8% jump for pharma giant Eli Lilly, taking its total value to $578 billion. The driver behind this rise was a positive trial result of a kidney drug owned by its Danish rival Novo Nordisk. Eli Lilly owns a similar drug for the treatment of cancer. On the corporate deal front, Exxon's rumored bid for Pioneer Natural Resources materialized, resulting in a $60 billion deal, the largest of the year in an otherwise weak mergers and acquisitions market. The IPO of German sandal company Birkenstock took place last week in the US, but investors were disappointed. Priced at $46, shares ended the week at $36.40, down 21%, for a market value of $6.8 billion. Looking ahead, the earnings season becomes more active, with Charles Schwab reporting on Monday, Bank of America and Goldman Sachs on Tuesday, Morgan Stanley, Tesla, and Netflix on Wednesday, among other blue-chip names. There will only be monetary policy meetings in China, Indonesia, and Korea. Finally, Argentina holds presidential elections next Sunday. That's all for this week. Please subscribe to the channel and help us promote it. Visit succinct.info to learn more about our subscription.